I'm here today with Greg, and he's the Vice President of First Community Mortgage, and of course, he's a mortgage pro. He's been in the business for 30 plus years. So if anybody can answer your questions about loans, that would be great. Today, we'll change it a little bit. Every Monday, we have our Mortgage Monday session, and we try to cover some mortgage related questions. Today we'll do it a little bit differently, so I will give some affirmations to Greg and he will let us know whether it's a myth or it's a truth. There's a lot of information out there, but there's also a lot of myths that can get you a little confused about the home buying process, and we're here to bust all those myths. So let's get started. Greg, are you ready?
I'm ready.
Good. Okay, so my first myth is I need to have a perfect credit score before I can buy a house.
Absolutely not. Myth.
Myth, okay?
Myth because credit scores to get mortgages can vary anywhere down to as low as 600 and then up obviously as high as they go. Now, there are guidelines for the type of loan that you can get based on where your credit score is at. But if you've got a low credit score, say you've got a score at 600 or 620 or 630, work with us as a lender or whoever to help move the credit score up a little bit because you'll get better terms, but you absolutely can still get a loan.
Great, awesome. So that was number one. Number two, that's one of my favorite. I need 20% down to be able to buy a house.
Myth.
Really?
Myth. There is so much of a fallacy out there that people have to have 20% down. If you're a first-time home buyer, did you realize that even on a conventional loan, as a first-time home buyer, you can get 3% down money? So FHA is 3.5%. VA and USDA are no money down. So no, you do not have to have 20% to get a loan.
Great, awesome. Next, I can't buy a house right now because I have too many student loans.
Both myth and true. And the
How's that?
reason I say that is that, first of all, if you have student loans, you do not have to wait to get a loan. Student loans will be considered part of your debt to income ratio, but as long as your debt to income ratios are in line with the guidelines, you can in fact still get a loan. Now, if your student loans are so high that they are going to push your debt to income ratios over the guideline limits, then you would not be able to get a loan today. But there are ways to deal with that, especially if you're doing conventional lending, and something to speak with us or your lender about.
Well, about that, before we move on, I've heard there was some changes with FHA and 1% of student loan being accounted for. What is that about?
FHA has a rule that if your student loans are deferred or if they show zero, that the lender has to use the greater of 1% up to a maximum of the fully amortized payment. So let's say, just make it easy, say you have $50,000 in student loans. 1% is $500. We would have to use $500 as the payment, even though you're not making the payment. You have to pretend as though you're making the payment and count that towards your debt to income ratio.
Gotcha. Thank you for clarifying. So my next question, myth or truth, is FHA and that this one we hear that a lot, especially these days. So FHA and VA loans are not good because they don't close. They take longer to close.
Myth. FHA and VA loans are fabulous loans, and they do not necessarily take any longer than a conventional loan. You've got to go basically through the same process as you do with a conventional loan. You've got to verify assets, you've got to verify employment, you've got to verify income, and you have to get an appraisal. And appraisals for FHA, VA, and conventional all take about the same amount of time. So I don't see any reason why it should take longer to close one of those loans.
Okay, so there you have that. So last, I have a bankruptcy. I can't buy.
Myth and true.
How is that?
Okay. The myth part of it is that if you have a bankruptcy, you can still get a house. Now, there's something called waiting periods. In other words, after you have a bankruptcy, whether it's a Chapter 7 or Chapter 11 bankruptcy, you may have to wait for some period of time before you can in fact get a loan. For example, if you're going to do a conventional loan, you do have to wait 4 years. If you're doing an FHA loan, you only have to wait 2 years. So if you've had a bankruptcy in the last 2 years, yes, you might have to wait for a little bit. But if your bankruptcy was, say, 5 or 6 or 7 years old, as long as your credit has been reestablished and you've got acceptable credit scores, you can still go ahead and get it and acquire a loan.
Great, awesome. Well, I think that gives hope to some of us out there. That was the end of it. Thank you so much, Greg. I think and I hope we clarified some myths for you out there, homeowners and wannabe homeowners. But if you have more myths or more truth that you're unsure about, please leave me some comments below, and we'll be more than happy to address those in our new episodes, in our next episodes. Thank you so much. Thank you, Greg. And I'll see you next Monday.
Absolutely.